Hello and welcome to another update video about Ethereum. We want to talk about the short-term bullish, short-term bearish options here for Ether. And let's take a look. What complicates the structure, and I did explain that in the last video, is that this swing low here that formed on the... I did explain in the last video, I think, that on the 1st of May, that swing low on some exchanges actually formed a lower low. Not spot, I think, but futures. That doesn't make it easier, certainly. But hey, let's talk about the two structures we're looking at. First of all, we're looking here at a downside structure. I mean, eventually, this might even form, I'm not entirely sure, but maybe a massive wedge pattern or something. I mean, just something to observe, or is it more a channel? Looks more like a channel. So that basically means really to get here confirmation that we are, let's say that we are developing something more bullish. We need a break out of this corrective price channel to the upside. At least it helps. It's not so much important from an Elliott wave point of view, but it's a corrective price channel. Or maybe even we can morph it into a wedge pattern, which would be a bit more bullish, but yeah, it's not really clear there. So either way, it seems to be a corrective price channel that obviously the bulls need to get the price above, outside of it to the upside to be more optimistic generally. But that's not going to be enough. So let's talk about the different scenarios. First of all, we're looking at a potential corrective structure, a pullback correction, which started here around the, what was that, 11th of March, 12th of March. I will probably revise the overall chart on the weekend for ETH, because I cannot see that anymore as a wave 4. Not, if we make another low, this has just come down too far for a wave 4. I talked about that like a few weeks ago, because we broke my initial support area, right, on this chart. So I still left it as a wave 4, but it's become too protracted. So it might be a wave 2 pullback, maybe also a B wave. I need to work through that. It's not easy. So I will work through that. But the idea is, and it doesn't matter in the short term, the idea is that we are currently still in the white count caught in a correction, and that it takes a 5-wave move up followed by a 3-wave pullback to increase probabilities that we have bottomed. And I will share with you what that means. So in the white count, we have a WXY structure, and we're currently coming down in this Y wave. The Y wave is an A, B, C pattern, and the C wave would be a 5-wave move. And here we only have seen a wave 1 and a wave 2. And this is now an A, B of wave 3, because we're dealing with an ending diagonal and that C wave. And in this scenario, there is a clear invalidation point, which is the top of the wave 2. It is here at 3,252. A break above it would invalidate the white microstructure. And does that mean we're all bullish? Well, it would at least push us into the yellow scenario. Already above initial resistance, which is here for the B wave, it's between 3,081 and 3,156. So a break above this resistance range will already indicate that something more bullish is unfolding, because typically a B wave would not stop in a B wave would stop in that resistance region or below. It doesn't seem as if it is stopping at the moment, or that it is getting rejected. So I think there's a good chance for at least the yellow count here. Okay. Also because this B wave has become quite protracted now, quite large. And in any pullback now, any move down, if we see 5 waves down and a break below 2,884, that would indicate, that the white count is likely sending us lower more directly. That's the white count. What do I like about this one? Well, it is a corrective rally. So that's sort of why I would say, okay, it makes sense to see this as a B wave in an ending diagonal then. Okay, so it's a corrective rally. We are still below resistance, and I need a pathway lower because we haven't formed a clear bottoming structure here. So that is that part. What I don't like about it is that the AB looks out of shape, but that's not invalid in any way. Okay, so we have to keep this alive. But also the wave 1 looks a bit more like a 5-wave move, and that is not really applicable in an ending diagonal. So I think white has its problems, has its flaws, but you see plenty of distortions on the smaller time frames. I can tell you that from experience. So it is something to be aware of, okay? But without a clear 5-wave move down on the smaller time frame, I cannot tell you that we have started the C wave of the 3rd wave in the white count to the downside. That takes us to the yellow count, in which we're tracking 5 waves up. And it is entirely possible that we are now in a larger B wave, so that this B wave here never topped, that is instead unfolding here, and that we're dealing with a flat structure A, B, C. So 3 from that A wave low. So until here, everything's the same until the 13th of April. But then we've seen a 3-wave move up in A, 3 waves down in B, and we're now rallying in a C wave, which could be again an impulse or an ending diagonal. That remains to be seen, but that distance needs to be measured from the Wednesday low to the recent high, or to the yesterday's high. And then we have a support area that we can use that will guide us higher. This support area will have to change with the price as we climb higher. This count looks actually quite good, but for me, it takes a pullback into support to confirm that. So there are 2 ways when when would I make this, let's say, formally the primary count, something that many people find very important. I completely, I would even ignore when I say primary alternative count, because that doesn't really matter, okay? Primary alternative, that is so, it's not important. The count that really is the one that could be traded always is the one where we have high reward, low risk, not necessarily the one that is primary. Okay, and that's one of the mistakes many people make. I talk about that all the time, right? It's more than, okay, I tell you it's primary count and that has to work out. This is way too simplified. There are 2 or 3 scenarios. Each of them at different points will provide a good reward to risk ratio, and that's the one that traders should use, okay? So it doesn't really matter if I call the count primary or alternative. There's just labels, yeah? So for example, if I told you the white is my primary, but we are in the support zone, I mean, would I short in this support zone? No, but this might be the time for someone who's scalping this to maybe look at long positions, because we are in the support zone where reward is high and risk is low. I mean, it's as simple as that, okay? It's also not about right or wrong. It's about identifying viable trades, understanding the chart structure. That's everything else is just, I don't know, it's not professional, and it is also ego-driven stuff. Yeah, so that you need to overcome that. I mean, a lot of people know that. Okay, a lot of you know that. There is a small minority who still thinks it's about being right or wrong, just because there are unfortunately some, not very professional. They call themselves analysts. I see that all the time on Twitter. They share their opinions, okay? But that's not professional analysis. They tell you, I've called this, I've called that, okay, but they don't tell you when they've been wrong, because they want to be right. They want to call the lows, they want to call the tops, okay? And that is not the way to do it, okay? Because markets are probabilistic, and you need to know at any point what are the potentials, where's reward high, where's risk low, and so on. And that's what the analysis gives you, okay? Now, maybe you don't need that, that's fine, but that's how it works, okay? So best is to get away, or to overcome this binary thinking of, okay, it's the primary count. If the alternative works out, that's wrong. No, it's not about that. Both are likely, okay? And if you want to succeed as an Elliott wave trader, it's about identifying the count that currently offers not necessarily the higher probabilities, but the better reward to risk ratio, because you cannot, and I cannot, and we cannot control probabilities. But what we can control is our entries where reward is high and risk is low. So you don't want to depend on the universe, when you make a trade. You want to depend on your skill and simple maths. Okay, that's trader maths, very, very simple. So yeah, I talk about that all the time. But it's worth pointing that out. Saturday weekend, okay, not much happening here. So, okay, so if any pullback happens and we hold this swing low, then for me it's clear that it should be yellow, certainly, okay, not white, because in the white count we would break support. And then we can develop that further. I mean, if those 5 waves fill in, it's likely going to be the C wave of a larger ABC flat, but it could also be the wave 1 of something more bullish, because when the white count gets taken out, then there is space for one more scenario, okay, which would be then a directly bullish one. So obviously we're first watching for 5 waves up. Yeah. If they form, then we can look at the 3-wave pullback, and then would develop further bullish updates and roadmaps from there. But first of all, to even think about that, we need the 5 waves up. for now, it's just too small what's happening here. That's my update about Ethereum. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.